Iran has been under some of the toughest sanctions in modern history, yet its economy continues to function. How does Iran still make money despite these restrictions? Who supports Iran, and which countries buy from them? Let's break it all down. Since 1979, Iran has faced economic sanctions, but they intensified in the early 2000s due to concerns over its nuclear program. These restrictions have cut Iran off from global banking systems, limited its ability to export oil, and made it difficult to import essential goods. Initially, the sanctions were aimed at pressuring Iran to halt its nuclear ambitions. However, over the years, they expanded to include restrictions on Iran's banking sector, shipping industry, and even its access to international insurance markets. The impact has been severe. Iran's oil exports, the backbone of its economy, were drastically reduced. Without access to the global financial system, Iran found it nearly impossible to conduct international transactions. Importing essential goods like medicine and food became a significant challenge, leading to widespread economic hardship and inflation. Despite these challenges, Iran has shown remarkable resilience. The country has adapted by developing alternative trade routes and forging new alliances. It has also turned to unconventional methods to keep its economy afloat, which we will explore in the next section. Stay tuned as we delve into the secretive world of Iran's economy and discover how it continues to thrive under some of the most stringent sanctions in history. Iran's economic strategies. In this section, we explore how Iran has managed to navigate around the severe sanctions imposed upon it. Despite being cut off from global banking systems and facing restrictions on its oil exports, Iran has developed a series of ingenious strategies to keep its economy afloat. Oil smuggling. One of the most clandestine methods Iran employs is the use of ghost ships. These tankers turn off their tracking systems to covertly deliver oil to friendly nations. This method allows Iran to continue selling its most valuable resource under the radar: petrochemicals and natural gas. Even with sanctions in place, Iran remains a significant player in the global petrochemical industry. By leveraging its vast natural gas reserves, Iran continues to produce and export petrochemical products, generating much-needed revenue: gold and precious metals. Iran has also turned to trading gold, particularly with countries like Turkey. This allows Iran to circumvent the financial restrictions imposed by sanctions and maintain a flow of hard currency into the country. Non-oil exports. Diversification has been key to Iran's economic strategy. The country exports agricultural products, textiles, and even cars to neighboring countries. By broadening its economic base, Iran mitigates the impact of sanctions on any single sector. These strategies have allowed Iran to maintain a semblance of economic stability despite the severe restrictions. However, these methods come with their own set of challenges and risks. Key allies and trade partners. Despite being isolated by the West, Iran has strong allies that help keep its economy running. China is Iran's biggest trading partner, buying oil and investing in infrastructure projects. China's involvement in Iran's economy extends to technology and manufacturing sectors, providing much-needed investment and expertise. Russia and Iran have strengthened military and economic ties, including energy cooperation. Both countries face U.S. sanctions, so they collaborate in oil refining and trade. This partnership not only helps Iran bypass Western restrictions, but also fortifies its strategic position in the region. Turkey continues to trade with Iran, especially in gold and natural gas. This enduring relationship allows both nations to benefit economically despite external pressures. Turkey's role is crucial, offering Iran a gateway to European markets and a steady flow of essential goods. Additionally, countries like India, Iraq, and Syria maintain economic relations with Iran, albeit more discreetly. India, for instance, has historically been a major buyer of Iranian oil and continues to import some Iranian goods through third parties. Iraq imports electricity and gas from Iran, while Syria relies heavily on Iranian economic and military support. The United Arab Emirates also has strong trade ties with Iran, especially in food and re-exports. Dubai serves as a significant hub for Iranian traders, facilitating the movement of goods and services between Iran and the broader international market. These alliances and trade partnerships provide Iran with the economic lifelines it needs to endure under sanctions. The interconnectedness of these relationships highlights the complexity and resilience of Iran's economic strategies. Iran has become skilled at bypassing sanctions through several methods. These tactics are not just clever, they're essential for the nation's survival under intense economic pressure. First, let's talk about Iran sets up companies in other countries to conduct trade on its behalf. These companies act as intermediaries, making it difficult for sanctioning bodies to track and block transactions. This network of front companies allows Iran to import and export goods with relative ease. Next, we have Iran has turned to Bitcoin and other digital currencies to move money without detection. Cryptocurrencies offer a level of anonymity that traditional banking systems can't, making them a perfect tool for evading financial restrictions. This digital frontier is helping Iran maintain liquidity and continue international trade. Then, instead of using dollars, Iran exchanges goods directly with countries like Russia and China. This old-school method of trade circumvents the need for financial transactions that could be flagged by international monitoring systems. By trading oil for essential goods or services, Iran keeps its economy somewhat stable. Lastly, we can't ignore Iran sells oil at a lower price or swaps it with other nations through third-party countries. These discounted deals make Iranian oil more attractive to buyers willing to take the risk, while ship swaps help obscure the oil's origin, making it harder to trace back to Iran. These methods are not foolproof, but they showcase Iran's adaptability and determination to keep its economy afloat despite severe sanctions. As we move forward, we'll uncover even more about how Iran's secret economy thrives under these challenging conditions. Stay with us as we dive deeper into this fascinating topic. While Iran has found ways to keep its economy running, it still faces major challenges that could threaten its long-term stability. Let's break down these issues and consider what the future might hold. First, inflation in Iran is a persistent problem. The value of the Iranian rial has plummeted, causing prices of everyday goods to skyrocket. This makes life increasingly difficult for ordinary Iranians who struggle to afford basic necessities. Next, corruption is another significant hurdle. Corruption within government and business sectors undermines economic growth and erodes public trust. This internal issue complicates efforts to implement effective economic strategies. Moreover, the country's struggling currency, the rial, continues to weaken against the dollar. This devaluation impacts Iran's ability to engage in international trade and further isolates it from the global economy. Despite these challenges, there are signs of resilience. Iran's strategic trade partnerships and innovative methods of bypassing sanctions have provided some economic relief. However, the question remains, can these measures sustain Iran in the long run? Will Iran continue to survive under sanctions, or will it eventually seek new negotiations? The future is uncertain, but one thing is clear. Iran's economic landscape will be shaped by its ability to adapt and navigate these complex challenges. What do you think? Will Iran's economy remain stable, or will sanctions eventually break it down? Now that we've examined Iran's methods of bypassing sanctions and its secret economy, let's delve into the specifics of who Iran trades with and what goods are exchanged. Iran's trade network is surprisingly diverse, involving a range of countries and a variety of goods. Despite sanctions, Iran has managed to maintain and even expand its trade relationships through strategic partnerships and innovative trade agreements. First, let's talk about Iran's key export partners. China stands at the forefront, being Iran's largest trading partner. China imports significant quantities of Iranian oil and petrochemicals, which are critical to keeping Iran's economy afloat. Additionally, China invests heavily in Iranian infrastructure projects, further solidifying their economic ties. Russia is another crucial ally. Both countries face U.S. sanctions, which has led to a robust partnership. They collaborate in various sectors, including energy, military, and trade. Russia imports oil from Iran and, in return, provides technological and military support. Turkey maintains a strong trade relationship with Iran, particularly in gold and natural gas. Turkey's strategic geographical position allows it to act as a conduit for Iranian goods entering Europe and beyond. India, although it has reduced its direct oil imports due to sanctions, still engages in trade with Iran through third-party countries. India imports a range of goods, including agricultural products, chemicals, and textiles. Iraq and Syria are also significant partners. Iraq imports electricity and gas from Iran, and both countries benefit from mutual economic and military support. Syria, reliant on Iranian backing, imports various goods and services necessary for its reconstruction efforts. The United Arab Emirates, particularly Dubai, has strong trade ties with Iran. Despite political complexities, the UAE remains a key hub for Iranian goods, especially in food and re-exports. On the import side, Iran brings in essential goods such as machinery, pharmaceuticals, and consumer products. China, once again, is a primary supplier, providing a wide range of goods from electronics to industrial machinery. European countries, despite sanctions, also contribute to Iran's import needs through indirect channels and humanitarian exemptions. In terms of trade agreements, Iran has signed several bilateral and multilateral agreements to facilitate trade despite sanctions. The most notable is the 25-year comprehensive strategic partnership with China, which covers various sectors including energy, infrastructure, and technology. In summary, Iran's trade network is a complex web of relationships and agreements that allow it to import and export a diverse range of goods. These trade relationships are crucial for Iran's economic survival and resilience in the face of stringent sanctions. Stay tuned as we explore Iran's secret economy and how it continues to thrive under sanctions. Iran has been under some of the toughest sanctions in modern history, yet its economy continues to function. How does Iran still make money despite these restrictions? Who supports Iran, and which countries buy from them? Let's break it all down. Since 1979, Iran has faced economic sanctions, but they intensified in the early 2000s due to concerns over its nuclear program. These restrictions have cut Iran off from global banking systems, limited its ability to export oil, and made it difficult to import essential goods. So, how does Iran survive? Iran's economy is still largely dependent on oil and gas exports. While sanctions have reduced its reach, Iran has developed creative ways to bypass restrictions. Oil smuggling: Iran uses ghost ships, tankers that turn off tracking systems, to secretly sell oil to friendly nations. Petrochemicals and natural gas. Even with sanctions, Iran remains a key player in the global petrochemical industry. Gold and precious metals. Iran has turned to trading gold, especially with countries like Turkey, to evade financial restrictions. Non-oil exports. Iran also exports agricultural products, textiles, and even cars to neighboring countries. Despite being isolated by the West, Iran has strong allies that help keep its economy running. China is Iran's biggest trading partner, buying oil and investing in infrastructure projects. Russia and Iran have strengthened military and economic ties, including energy cooperation. Both countries face U.S. sanctions, so they collaborate in oil refining and trade. Turkey continues to trade with Iran, especially in gold and natural gas. Iran still manages to sell its goods and resources to multiple countries, even if some transactions are done secretly. China buys oil and petrochemicals. India, previously a major oil buyer, still imports some Iranian goods through third parties. Iraq imports electricity and gas from Iran. Syria relies on Iranian economic and military support. The United Arab Emirates has strong trade ties with Iran, especially in food and re-exports. Iran has become skilled at bypassing sanctions through several methods. Using front companies. Iran sets up companies in other countries to conduct trade on its behalf. Cryptocurrency. Iran has turned to Bitcoin and other digital currencies to move money without detection. Barter trade. Instead of using dollars, Iran exchanges goods directly with countries like Russia and China. Oil discounts and ship swaps. Iran sells oil at a lower price or swaps it with other nations through third-party countries. While Iran has found ways to keep its economy running, it still faces major challenges, including inflation, corruption, and a struggling currency. Will Iran continue to survive under sanctions, or will it eventually seek new negotiations? What do you think? Will Iran's economy remain stable, or will sanctions eventually break it down? Gap 3S. One of the most fascinating aspects of Iran's economic resilience is its ability to trade in alternative currencies and financial systems. In this chapter, we'll delve into the currencies Iran trades in and the methods the USA employs to stop transactions in dollars. We'll explore the alternative currencies and financial systems Iran uses to bypass these restrictions and the impact of these measures on Iran's economy. The US has made it incredibly difficult for Iran to use the dollar in international transactions. Through sanctions, the US has targeted banks, companies, and individuals involved in trading with Iran. These measures have cut Iran off from the global banking system, making dollar transactions almost impossible. So how does Iran continue to trade on the global stage? By turning to alternative currencies and financial systems. Iran has increasingly used the euro, the Chinese yuan, and even the Russian ruble in its trade deals. By diversifying its currency portfolio, Iran reduces its dependency on the dollar and mitigates the risk of US sanctions. Cryptocurrencies have also played a significant role. Bitcoin and other digital currencies offer a decentralized and relatively anonymous way to conduct transactions, making it harder for US authorities to track and block these trades. Iran has even encouraged domestic mining of cryptocurrencies to build up its digital reserves. Then, there's the barter system. Instead of relying on monetary transactions, Iran often engages in direct exchanges of goods and services. For example, Iran might trade oil for machinery from China or agricultural products from Russia. This method not only bypasses the need for currency, but also strengthens bilateral relationships. Another strategy involves using financial systems outside the reach of US influence. The Instex mechanism, set up by European countries, allows Iran to trade essential goods like food and medicine without using dollars. Similarly, Iran has been exploring the use of blockchain technology to create its own financial networks. These alternative methods have had a mixed impact on Iran's economy. While they provide a lifeline, they are not without challenges. The lack of access to the dollar has contributed to inflation and a devaluation of the Iranian rial. However, these measures have also spurred innovation and self-reliance, pushing Iran to develop new financial technologies and trading partnerships. In the end, Iran's ability to adapt to financial restrictions showcases its resilience and ingenuity. But the question remains, how sustainable are these alternative methods in the long run? Will Iran continue to find ways to circumvent sanctions, or will it eventually seek new negotiations to lift them? Stay tuned as we explore more about Iran's economic strategies and their implications for the future. As we've seen, Iran has employed a variety of methods to navigate through the maze of international sanctions. But the question remains, will Iran eventually make a deal with the USA to lift these sanctions? And what would such a deal entail? The possibility of a deal isn't just a distant dream, it has historical precedents. The 2015 Joint Comprehensive Plan of Action, or the Iran nuclear deal, was a landmark agreement that saw Iran agree to limit its nuclear program in exchange for the lifting of economic sanctions. However, the U.S. withdrawal from the deal in 2018 under the Trump administration brought back a wave of stringent sanctions. So, what would a new deal look like? First and foremost, the USA would likely demand strict limitations on Iran's nuclear activities. This would include reducing the number of centrifuges, limiting uranium enrichment levels, and granting broader access to international inspectors. But that's not all. The USA would also push for Iran to curb its ballistic missile program and reduce its influence in regional conflicts. This means Iran would have to scale back its support for groups like Hezbollah in Lebanon and the Houthis in Yemen, as well as reduce its military presence in Iraq and Syria. In return, the USA could offer a phased lifting of sanctions, beginning with sectors most crucial to Iran's economy like oil and gas, banking, and automotive industries. Humanitarian goods such as food and medicine would also be prioritized, ensuring immediate relief for the Iranian populace. However, this is easier said than done. Trust is a significant barrier. Iran would seek guarantees that the USA won't unilaterally withdraw from the agreement again, and might demand a multilateral framework involving other major powers like the European Union, Russia, and China to ensure the deal's longevity. Moreover, domestic politics in both countries play a crucial role. In Iran, hardliners who view negotiations as capitulation may resist any deal, while in the USA, any agreement would require bipartisan support, which is increasingly difficult to achieve in a polarized political landscape. So, will Iran make a deal with the USA to get out of sanctions? The answer is complex. While both nations have incentives to reach an agreement, the path is fraught with political, strategic, and ideological hurdles. One thing is clear: any successful deal will require compromise, goodwill, and a shared vision for a more stable and prosperous future. Stay tuned as we continue to explore the intricate dynamics of Iran's economic strategies and their broader implications on the global stage. As we delve deeper into the complexities surrounding Iran's economic strategies and international relations, one critical question remains: how have sanctions influenced Iran's nuclear ambitions? Iran's nuclear program has long been a focal point of international scrutiny. Initially, the program was portrayed as a peaceful endeavor aimed at energy production. However, suspicions grew over its potential military dimensions, leading to a series of sanctions aimed at curbing its progress. Despite these sanctions, reports indicate that Iran has made significant strides in its nuclear capabilities. The country has increased its stockpile of enriched uranium and advanced its centrifuge technology. This raises a crucial question: have the sanctions actually been effective in halting Iran's progress toward developing a nuclear weapon, or have they had the opposite effect? On one hand, sanctions have undeniably placed economic pressure on Iran, limiting its ability to procure materials and technology essential for its nuclear program. This has forced Iran to develop more self-sufficient methods and to turn to clandestine networks for acquiring necessary resources. On the other hand, the economic strain has also fueled a sense of defiance within Iran, pushing its leaders to accelerate the nuclear program as a form of resistance against what they perceive as unjust international pressure. Furthermore, the reimposition of sanctions after the U.S. withdrawal from the 2015 nuclear deal has only exacerbated the situation. Instead of capitulating, Iran has responded by breaching several key limits set by the agreement, such as enriching uranium to higher levels and installing more advanced centrifuges. The international community remains divided on how to address this issue. Some advocate for increased diplomatic efforts and a return to negotiations, while others call for even stricter sanctions and potential military intervention. The effectiveness of sanctions as a tool to prevent nuclear proliferation is still a matter of intense debate. In the end, the impact of sanctions on Iran's nuclear ambitions is a complex interplay of economic hardship, political resolve, and strategic maneuvering. While sanctions have undoubtedly slowed down certain aspects of Iran's nuclear program, they have also contributed to a more determined and self-reliant Iran. As we continue to monitor this evolving situation, one thing is clear: the stakes are incredibly high, and the path forward will require careful consideration, international cooperation, and a balanced approach to ensure a peaceful resolution. Stay with us as we uncover more layers of this intricate geopolitical puzzle and explore the broader implications for global security and stability.